Stocks on the Chinese mainland rallied today despite the lockup restrictions expiring on the China export. 28 startup companies become tradable today, equal to a quarter of the total outstanding stock on the board. Chian has more.
At market close, the Shanghai Composite Index was up more than 2.5% to stand above the 3,000 mark. The Shenzhen Component Index rose 2.8%, while the Chinex Index was up more than 4%. The end to the lockup period of startup shares means about 23 billion yuan worth of shares might flood the market. These stocks have underperformed on concern that executives and investors who held shares in the companies might sell to pocket profit. And retail investors were expecting the worst with the lockup period ending, so a lot of them were surprised.
I never thought it would be like this. I think that I was timid when the enterprises board was launched. Now I regret it. I should have invested.
Tracking 100 startup companies, China's version of the Nasdaq stock market has gained 6.7% since the gauge was introduced on June 1st, trailing the 17% advance for the Shanghai Composite Index. Now the Chinex companies are about 3 times as expensive as the average Chinese stock relative to earnings, and analysts see a reason not to sell.
For those shareholders of the companies listed on the startup board, I don't think that they will dump their shares. Firstly, they need to keep their share portion in the company. Secondly, I think they are confident about their company's futures based on the rosy outlook for China's economy.
China's economy grew 10.6% year-on-year in the first 3 quarters, and the State Council says that it is maintaining momentum for stable, rapid growth. Chian, ICS News.